What is up, everyone? Welcome to another edition of our weekly Friday market update. Every Friday at 12 p.m. Pacific time, I go over live what is actually happening when it comes to major moves for Bay Area tech companies. We look into the data as to what is actually happening in terms of prices and demand. And we also go over any sort of relevant national news that might impact the local Bay Area market here. If you or anyone you know is actively searching, considering to buy, sell, or invest here in the Bay Area, I'd love to be introduced to be able to help you every step of the way. As you may see, the election is over. So for those that are on the fence, that's not an excuse anymore. Time is up. Let's get going. But without further ado, let's get going with some of our news as well. So one of the big news is, as I mentioned, it's very important to watch and understand what are the big tech companies doing. At least that gives you an idea of what is happening when it comes to commercial real estate, especially here in the southern part of the Bay Area. Facebook expands again in Fremont as big tech lifts real estate market. Facebook on Tuesday said it had leased another 115,000 square feet in basically Fremont, Newark side, which is basically following their total of 230,000 square feet at the two neighboring locations. This houses about 1,500 employees, at least in the past. So for those that know about how Facebook actually grows, as many of you know, Facebook has their large, massive corporate campus out in Menlo Park. And as you can imagine, right across the bridge is Newark, off of Dumbarton Bridge. And so they have many people that they continue to expand there. If you understand how Facebook's laid out, though, traditionally in the past, the engineering talents and the developers are all kind of in the Menlo Park campus area. You have the Burlingame location, which is where Oculus is. So their AR, VR, kind of all their engineers and talent are in that potentially new office. There's three massive buildings right next to the highway. However, in Fremont, they continue to expand and add people that works there. Mostly it's like operations people from what I've seen. I've been on campus for all those campuses. I've seen them all. And so I know kind of how these companies are growing and where they're growing and why they're growing a certain way. So they're not, the individuals there are not as high earners as the engineers and data scientists out in Menlo Park. However, still, there may be an option now that may be a flex workspace, but there's also fantastic talent, of course, that is expanding there. So really interesting to see, as I mentioned before, these big tech companies are seeing this as a very, very rare opportunity where a lot of companies are moving or just not leasing as much because they're uncertain about their future. But for Facebook, Google, Amazon, they're looking at this like, man, this is a perfect opportunity. Let's lock this in, really low rates. These developers and these commercial business owners are willing to cut something out. But it also gives you an idea, like these big tech companies are actually more rooted, as you can see here in the Bay Area, versus, as you see momentarily, you look at Dropbox and Glassdoor. I mean, these guys are just running from the hills for the hills, right? I mean, they have massive spaces. They had all these plans of, look at this beautiful space that they had, which is 472,000 square feet of space in Mission Bay, like brand new. And they're subleasing it all. I don't know who's going to rent it per se or sublease it, but it's kind of disappointing to see like these guys, once people have the flexibility, they're just going to run away and kind of abandon the city. So a little bit disappointing to see some of these other younger companies, smaller companies do so. But it does give you an idea, like there is, it's a tale of two stories. In this case, a tale of two cities. San Francisco, a recent report that I saw, they had like 40% less revenue, and yet their budget has continued to increase over the years. So I think SF is going to have some challenges, significant challenges, even if things get better. But here in the South Bay, it seems like things are doing very well, especially how these companies are thinking, and they're going to continue to expand in those areas. Really important to understand, especially as you decide kind of which area that you choose to go, make an investment or to decide where you want to ultimately live. In terms of loan side, all loan types continue to experience drop in forbearance. So for those that are hoping for this massive forbearance wave, make no mistake, there will be some areas that have it. However, here in the Bay Area, the likelihood is going to be much less, given we're in a market that tends to be much higher in appreciation versus a lot of other markets. But if you're like an out-of-state investor, then there may be opportunities there. The lower the price point, the more potential risk there is when it comes to forbearance. But if you've been banking on that here in the Bay Area, it's going to be very difficult, because you have to also remember, why would somebody go through forbearance? Why would somebody go through foreclosure? The only way you do that if you're underwater, right? If the value of your house is less than what you owe. But for the most part, you're not. So if people are really in distress, they would simply just sell it and make money and then move on. So for those that are hoping some sort of discount like it was back in the meltdown, it's a very different scenario for that reason. It's just something for people to understand. I've been saying this a lot, and it's true, right? Like there are certain times where buyers and sellers agree that it's a good time to enter the housing market, whether you're looking to buy or looking to sell, because it really depends on the situation that you have. So for example, on the buy side, you're locking in record low interest rates right now. And so what happens if interest rates tick up or they go higher? It's your buying power is less. And remember, this is not a fluctuating interest rate for yourself. It will fluctuate from what you see on the market, but for yourself, you have the opportunity to lock in a number for at least 5 years with a 5/1 ARM. And at most, you can do it for a 30-year fix. So it's something very important to understand. Like it's why things are so busy. It just makes a lot of financial sense for a lot of people. On the sellers, it depends on their reasoning, right? If they truly believe that they can work anywhere, they may move further away. They can sell for a good profit right now, right? So if you're a seller, you can think about that. And some are landlords, right? So renters have a lot of options today. They have more options than before. Rental prices have dropped about, I would say, about 12% across the board around the Bay Area, even for better properties. So some of the landlords may like to say, hey, look, I don't want to keep playing in this market. Once my renter leaves, then I'm going to go sell it. So it's a good time for them too, because at the same time, it just makes sense for both sides. So that's something very important to just understand. It just really depends on your time horizon, and it also depends on your situation, is how people should decide whether they want to buy or sell the house. And of course, I would be happy to help either way, at least provide the guidance and the data, because it's quite, frankly, an incredible time. Don't make this mistake now and cry back a year later if interest rates do rise and prices do increase. Your buying power is not the same, and your monthly payment at the end of the day is most important. It's kind of a cash flow equation than anything else. So let's take a look at the data and let's see what's happening, right? So as I brought up last week, this is let's go for San Mateo County first. This is San Mateo County. So the last couple of weeks have been really low inventory, lower than usual. I mean, San Mateo already doesn't have very much, but you can see at least this week has picked up a little bit, but not that much. It's still lower than the previous weeks. So be aware, right? People that are looking in San Mateo County, just options are not as plentiful. You also have to be ready, because you look at the number of contingent and pending, it is still very high relative to the amount of new listings that are coming on a week. You can see price list decrease only by 49, which is much lower than any other week over the last several months. So something to be aware of. Things are still moving fast. You can see the November figures were already through midway of November. They kind of ticked back up from what it was in October. This is single family homes in San Mateo County. So the average at this point is around $2.1 million for a single family home. Now, when it comes to townhomes, condos, looks like as of right now, the prices have dropped when it comes to condos, townhomes. I suspect it's going to be fairly normalized at the end of the month. It's just kind of what it's been. It's just things have pretty much sold for at or a little bit below what I've seen over the last couple of months for condos. So that's San Mateo County. Santa Clara County, similar effect. As you can see, 320 new listings versus 313 last week, which is much lower than it was the previous weeks. So we are about 20% less listings that are hitting on the market. So if you thought it was hard before, it's going to be even harder moving into the holidays. Same contingent pending is still much higher than it is when it comes to new listings a week. And when it comes to prices, I mean, look at this for single family houses. And so if you're even on the fence to sell a single family house in Santa Clara County, just look at this. These are record highs. These are all-time record highs, right? When it comes to Santa Clara County. So right now, I think we're at like 1.7, 1.8. I mean, it's been pushed up, and I see it for myself. It is competitive out there, but it's still very doable to find the right house. Um, you just have to have the right game plan for each specific house. But you can see there is upward pressures when it comes to single family homes in Santa Clara County. Even with condos, townhomes, right? Prices have increased. Not a lot, but it still has increased over the last entire year. So right now we have approached all-time highs for condos, townhomes in Santa Clara County. Alameda County, similar effect. You can see we have continued to push all-time highs for Alameda County. It's been a very popular location for a lot of people, especially for those that have lived in the city for a long time. Or a common thread is a lot of people from San Mateo County are also moving to the East Bay for different reasons. A bigger house, you still pay less, and a lot of areas in the East Bay have newer homes. And so that is a very popular option for many, hence why it's very, very popular, and the prices continue to reflect that for single-family houses in Alameda County. For condos, townhomes, it's been relatively flat, small, slight increase, but nothing too crazy. Nothing too crazy at this time. And the last area I'll cover in this report is Contra Costa County. Contra Costa County is not as high as it was reported last week, because I mentioned this was a huge spike. I didn't expect that to happen if you tuned into this show last week, but it is still hitting record highs, right? Now, keep in mind for Contra Costa County, at the last recession about 12 years ago or about 10 years ago, many of them are actually about that same level as it was, because it's a very different effect in Contra Costa County versus the other parts of the kind of core Bay Area. However, a lot of the changes are different now, right? It's not the crazy environment as it was before, in the sense of people just buying with really low down, fake income, and things like that. But it's a very, very popular location, given most of the homes out there are really big, as in like, it's very easy to see over 2,500 square feet for under $1 million. And these are all newer properties. So a lot of people say, hey, look, if I can work remote, it's still somewhat close to the BART line. Let's go ahead and look into, that county for a property. And then if you look at condos, townhomes, that has also increased over the year, basically approaching, if not matched, the record highs that we have since last August. So I hope this was helpful. Of course, if you have any questions, feel free to leave it in the comments below. If you feel like anyone can take benefits of all this information related to what is actually happening when it comes to the local Bay Area marketplace, feel free to share it with your friends or reach out direct. Happy to have a conversation with yourself. I'm very, very fortunate. I'm working with maybe, 20 plus buyers as we speak, and various different listings are coming up on the market. So really, really amazing, and can always help additional people go through that journey to hopefully either get into ownership, invest in property. As given the low rates, I'm going to be buying another property myself, or some people may want to sell property. So if anyone's on the fence, you look at the data. It's like I said, it's a very, very rare and unique time, because it makes sense for both sides to buy and sell, because at the end of the day, it just depends on your time horizon, and also depends on what your cash flow situation is. And so really incredible times to see. Given with the election, I'll make a quick thing, because I'm going to make a video in the future about what does a Biden administration do for real estate. But the quick summary related to that is this. And if you tuned in, unfortunately you did. My bets and my bet is, and my thesis is that I don't think much is going to change, which is good when it comes to the economy, when it comes to real estate prices as well. Mainly because while the president has won, while it's a new administration, there's no majority yet on the Senate. Now, of course, in January they have a runoff in Georgia, so that will be interesting. But my bet is that it's going to be voted Republican and just keeps it balanced. And I think what you may have seen of the election, while you hear all this news about some are on the far left, some on the far right, at the end of the day, the people voted very clearly that people want it in the middle. Like, we are all Americans. We are not Democrats per se. We're not Republicans per se. There are obviously people on the far ends, but a majority of people just want something balanced in the middle. And it's very, very clear for seeing that, right? And otherwise, you would have seen a huge runoff for the Senate side, which isn't the case. And so I think everybody's aligned. Like, we hope that the Biden administration will certainly help a lot with the way to handle COVID. But at the same time, I don't think there's going to be as many drastic changes as what they have reported. Nevertheless, I will do a video related to kind of what is their plan, how does it affect real estate in particular, what was Trump's plan, so you can kind of compare yourself. At the end of the day, there's no one's a fortune teller, but you have an idea of what they're trying to do. But my initial guess, given what we have seen so far, is that it's pretty much going to be what it is for the next 2 years, which means I'm very bullish on assets over that period because rates are going to still stay at hopefully very low figures, at least the Fed level rates. So it'll be interesting to see. Well, hopefully you appreciate those insights. Of course, any questions, let me know anytime. Stay warm and have a nice weekend. Bye now.
Thanks for making it to the very end of my YouTube video. If you like the content, please hit that subscribe button. Make sure you hit that little bell as well, since it'll give you notifications of when my next episode is. If you know of anyone that is considering to buy or sell a home here in the Bay Area, I'm never too busy to help more people. Always welcome to have a conversation, regardless if you're ready to go right now or if you wanted to buy 5 years later. Click on that calendar link and then you'll be able to book an appointment with me and love to have a conversation about your situation. In the meantime, I also do have a monthly newsletter, so feel free to hit that link below, and then you'll be able to get my updates, personal updates that I write once a month in terms of what is going on with the market and some of my latest activities. Hope to see you at the next one. Thank you.